Hi, Natalie. Hi, Dudley. Can you hear me? Hello. Good morning.
Hi, Owen.
Hello. Hi there. Hello. Hello. Hello there. I hope you're well. How's your week been?
First quite week in ages actually. Funny enough, we're doing our audit at
Oh,
work.
okay.
Audit at work and then audit at college. So it's lots of audit at the moment.
Enough exposure, right?
Yes.
Yeah, it's good. I mean, I think it's good to to if you can get involved. I don't know what your Hi, Hannah. Hi, James.
Hello.
Hello. How are you?
Good, thank you.
Awesome. Hi, Hannah. Are you there? Hello? Oh, she's probably still. Oh, is she in? Hannah's. Okay, no worries, Hannah. I can see that your sound. You don't seem to have a sound button just yet. I'm not sure. You might be able to hear me. You can message. You can write in the chat box if you can hear me. But yeah, Dudley, I was just saying that. Yeah, I mean, I don't know what your because you're technically what's referred to, aren't you, in the technical term, I think, for what your role is a substantive post where you're not on a rotation, are you? It's not like they can rotate you within the different departments. I don't know if your organization is that big enough anyway, if you can get rotated right round the different parts of your organization. Can you? Is that
That's the hope eventually. I want to be. I've sort of my role at where I am is a bit stagnant. So I've asked, spoke to some of the senior management team at sort of Iris and whatnot, and I said that
that's right.
With working from home now, especially because they weren't really a working from home business.
Of course.
But I said, I want to step away from where I am.
Yeah.
Now and move to sort of maybe the head office and maybe do like a week or two.
Sure.
To a week up at Heathrow. Sort of get to know the business a bit more.
Yeah.
Various departments that they have and whatnot.
Yeah, definitely. Hi, Graham. Good morning.
Good morning.
Hello. Good stuff. Yeah, I think definitely that's something that if you can. I mean, I know that those in practice, even in practice, it's not always well. The advantage of working in a either small or a mid-sized practice is that by virtue of the work, you have to do accounts prep, you have to do tax, you have to do returns, some VAT, whatever. You might even get to do the one or two audits. So it's I think definitely once you're in management accounting or in industry, you have to either, and if it's not because I know I know Dudley started as an apprentice and then Graham came in, and then did Graham start as an apprentice or did you?
No, I did start as an apprentice.
Yeah, Graham started as an apprentice as well. Yeah, so typically some apprentices, if they're designed from the beginning, but Debbie's a general sort of a generalist, so to speak. So typically they'd ask and say, "Oh, can they be rotated?" But as much as you can do, and it depends on the business as well. They might want to, but it's just tough. It depends on the layer, the structure of the business. But yeah, so as much exposure as you can get, especially when the auditors arrive, is always good. Even seconding to help them get some work on areas that are not so critical. It's always good. Right. Good. Great stuff. So I hope you're all well. So let's Hannah, let me just clarify. Hannah, can you hear me, Hannah? If you write in the box, so I have an idea of whether or not you. Oh, let me write in the box. Actually, sorry. Hi. Oh, yes. Oh, you. So, hi. So you can hear me. Oh, good. That's fine. That's okay. I have a feeling it's your sound. That's okay. That's right. That's okay. Microphone not working at the moment. No problem. No worries. Cool. No worries. I hope you're well. All right. Let's go. So, thank you again. Like I say, those of you who are sending in work. I mean, it's great. Just keep. I mean, I know it's difficult, and it's just keep sending in as much as you can. And I will try and do my mark. It's this lockdown has created a different balance in the way we all work. So for me, I'm either waking up early in the morning to do all my marking, and then the rest of my day is just no chance. I can't even do anything, and it's just a weird. Can't do anything. There's no way. You've got someone on your head, and you've got another little one crying there. You're like, oh, so there's no chances. You almost need to eke out time. So you might get, but I always save my emails, so I release them in the morning as opposed to sending them at like 2 a.m. in the in the morning. Cool. Let's kick off. So I think I said what my plan was that I wanted to, because you'll see that the way what we're doing now. Let me share my screen so that I can then do some. Yeah. Go here. Share my screen. Okay, great stuff. So. Yeah, so 9. Right. So what you will yeah, oh, does this no, this allows me to write, but what you will notice here, what you'll see now, where you're getting to now is that when you look at an exam paper, you will see that there'll be a question on every question will have elements of knowledge elements, if you like. So on the framework, on engagement letters, you'll always get a little bit of a question at the top of 4 marks. But the chunk of the question will start, you might get whether the bulk of the marks will be, if you have 4 questions, for example, your first question will be on ethics, if you like, and independence. You'll get a scenario, if you like. Then the next question will be on more sort of audit procedures and the risks within the organization. So when I say audit procedures, I mean audit risks, forgive me, well, the audit risks, and if you like, the control issues, because audit risk, I guess, is composed of inherent control and detection risks. So you will get this type of picture as well. Then the next kind of big picture you will get is this thing to do with the actual substantive testing audit procedures. You'll get that as a question. Then you might get broken down in bits there, bits on post-audit work. You could get, of course, when I say post-audit work, you could get kind of going concern, a whole question. So they might substitute something there or split. You see where I'm going. So you also want to be very comfortable with that. But that going concern work kind of forms closer to reporting. Then you should get a question on reporting, because they want to know if you are comfortable with being able to advise on the right opinion, if you like. So that's kind of the structure of audit. And I think that if you can steadily, and the work I'm getting, I can see that many of you are getting used to the language, and if you can stay with that, just doing 2 or 3 questions a week, they get faster because you're literally repeating, and you will notice that many of the introductory questions, like discuss the responsibilities of an auditor to do with fraud, repeat themselves, or what's in an engagement letter, or something along those lines. So you just get faster at grabbing the right language from the exam kit, from the answers, and you just start getting your marks. So that's the important bit. And of course, you still have the objective section that you want to keep doing over and over again. So thank you for the material that you sent me. So what I want to do is almost work backwards. So if you notice that review and reporting, there are 5 questions there. So because I'm almost sure you're going to get something along these lines. Not that I'm not saying the other work is not important, but that one is just ticking over, and we'll keep coming back to it. And again, in a way, you start understanding where risks are. You could almost read a scenario and pick out all the risks, and it's just making sure you write the right relevant audit procedures or audit responses ultimately. So in a way, you could almost get there, your 50, 51, 52, without even thinking. And then by the time you now really think about it, you can hit the sort of mid 60s to 70s, which is where we're making sure we're getting there. And then, of course, anything great will be brilliant. So today we're going to focus on review and reporting. My dream would be to get through Clarinet, Paprika, and the third one there was well, let's get through, and Panda. Yes. Clarinet, Paprika, and Panda. It doesn't really matter if we don't get all three. It's not the, it's just, that's the plan. So, but you can see what I ultimately want you to do, definitely, please, for the weekend, is to finish off the last two and then keep that file. You're still thinking, okay, I've done all the questions on review and reporting, keep it, and then you go back and tick through the rest, and then, so we will do that for the rest of July, and then, which means for the rest of August, we can then focus on looking at exam papers. I can release those. And so we're very much on course to doing well here. So let's go to Paprika. So, sorry, the first one there was Clarinet. So what I will give you the benefit of the doubt is this. So I know that Natalie has sent me this Clarinet, and I think I've marked it. Yes, Natalie has, but I think it's just Natalie. So sorry, Natalie, I'm not calling you out so that the rest go, oh yeah, Natalie, you're doing the work. I'm joking. So we're all friends.
Don't worry.
It's a bit like school, isn't it?
I'm scared of getting told off.
No, it's okay. It's kind of the other way around. I remember in school sometimes, definitely, you do your work and you wouldn't want to say because there's just no time. I wish we were in real class. We're going back to class anyway. There's just never any time. It's not, I mean, I went to high school in Lagos, Nigeria, and it's very different to here. Where here, most people go to day schools because it's kind of the norm. Back at home, it's cheaper for your parents to send you away to boarding school because they had to work. This is really the reverse. And the government schools are like grammar schools. Everyone does an exam, you go in, kind of similar, but it's cheaper. So because you live and work together as boys, if the teacher said who's done their homework, you were really cautious about saying you had, if no one at you, because you were thinking you were going to get bullied back in the dormitories. So you just keep quiet and like get punished together, even if you've done your work. I mean, look at that for peer pressure, kind of worrying. So where are we here? Yes. So what I want to give you, so what I was going to ask Natalie to do is, Natalie, I know you've done this and I've marked it, but I would like you to go on with Paprika. I know you mentioned you were going to try and do that for me as well. If you've done Paprika as well, that's fine. If you haven't, start working on Paprika. If you've done Paprika, start working on Panda. It's not a problem. It's a revision class. But the rest of us, and anyone else who's done Clarinet but hasn't sent it to me, you can move on to the next one. But what I want to give you is Clarinet is worth how many minutes? 20. Okay, great. So that's, I'll do 20 times 1.8, which is about 36. So I'll shorten it to 35. So I want us to focus for the next 35 minutes, 30 to 35 minutes. Make some notes. You'll see that it's not a crazy question. Make some notes. You don't have to write out in full, but just make some key notes and big key points as to how you would answer Clarinet. And let's go from there, right? I'll do that. But for the rest of, if you've done this, please go on to the next question. So it's 9:42. So yeah, we'll say quarter past. We'll say quarter past. Yes, quarter past 10. We will feedback on this question. Thank you. James, have you found? Do you have a version of this question in your kit?
Yeah, I'm just trying to find what number it is.
Okay, no problem. Let me know if you're struggling. Hi guys. Okay, right. Great stuff. I mean, again, like I say, don't worry if you haven't. I mean, I'd be interested to know how, in terms of how you did in terms of time, in terms of making your points. But audit is in terms of writing. I think if typically if it's planned well, it's not one of those where, um, if, as long as you try and stick to some time, you can make up for the for time. Um, Again, you see, remember, there's nothing wrong. The good thing about audit, again, and like I say, is that because you're starting off with your AEIOU typically for your procedures, you're almost clear as to where you're going because you're clear about the assertions. It's not as essay based type as people think it is. Because if you're looking for risks, you're writing down the headings. You can see you're getting the points straight away. So we're not too bad for time management because we're not just randomly writing and hoping we cover everything. So let's kick off with this first bit here. So I mean, like you've read it, so let's not waste any more time reading, but we'll look at it again. So first of all, it says describe the procedure. So we have a situation here where at the year end, there's a problem with the online ordering system. As a result, here we are. Clarinet has investigated the problem post year end and discover that other work in progress is similarly affected and inventory should be written down. And the finance director believes that as this misstatement was identified after the year end, it can be amended in the 2005. So again, like I say, even when we go to the answers, you probably for 4 marks, you want to have at least 4 strong answers. When I say 4 clear, this is the answer, this is the consequence in effect. So let's jump in. So please, feel free to release your mics, and I'll just sort of again, like I say, even if when we look at the answers, there are lots of reasons here. I think there are lots of things they could have additional issues or procedures. I guess first of all, you want to be specific to inventory, I guess, and then you want to look at the picture in general, but then look at the benchmark for, I'm just trying to say things without telling you the answer directly just yet, the benchmarks for discussing procedures. Remember, you don't have as much time as an auditor, so you're constantly trying to not cut corners, but you're trying to make the best use of your time. Okay, great stuff. So let's go. Yeah, why not? I'll go off with Dudley. If you give me one answer, something you thought was a procedure you felt, I think this is something I would consider.
So I would trace back the incorrect inventory and to try and find the full balance of the misstatement to work out whether or not it's material.
Perfect. Now, it's so easy to forget. It's so easy to, usually, again, hopefully as we carry on with the questions, some questions will be kind and give you profit before tax and give you revenue and give you the amount of inventory involved. And so you can work out materiality. Yes, I'm just going to push now. Sorry, I'm just teaching randomly. Graham, what's the recommended materiality for profit before tax? Percentage-wise?
Is it? Oh God.
Sorry. I know I was on the spot. It was slightly unfair there. But I just thought, why not?
Is it 5%?
It is correct, 5 to 10%.
Okay.
So technically 5%. I'll go with 5%. Once it's over 5%. And I'll push you, James. I mean, this is all you need, really. If you say that, you're okay. But we can also assess for revenue. We can also, so for fuller marks, you want to calculate 5 to 10% of profit before tax. And James, what percentage of revenue? I mean, revenue is massive, so you want a really much smaller percentage.
3.5.
Good guess. No. No, Natalie, can you help him?
1/2 to 1, is it?
It is 1/2 to 1. Don't worry, James. It's okay. You'll remember now. It's 1/2 to 1. It's 1/2 to 1%. So if you're giving both, you want to do that. You're not in this case. So you need to test for materiality. It needs to be worth your while. You're not just going to do it just because. That's the first thing. Just to add to that, the next thing I want to add here to this is this question of when you go into an audit generally, right, you would assign, if you like, materiality for different sections, and then you'd have an overall materiality, right, referred to as a performance materiality. So just because you might have, so you in a way, you're sort of saying, listen, I've looked at this within inventory, it's not material, but then of course we make a note of it, right? And looking, remember you do an overall review and looking at all materiality overall, you might then think, actually, we've actually shot past our overall materiality, and I feel this will not give us a good overall picture. Something along those lines. So you might have another slight irritation because maybe this happens every single year. They seem to be having this same error and you just don't like it. So that's the first step, to look for materiality. Very good. Let's just per se, I guess you could also, I mean, yeah, so thank you, Natalie. Let's go to Natalie. What was one of the, if you have your notes with you, what was one of the answers you gave for this?
So I said they should discuss it with management to understand why they're occurring, basically.
Yeah, I think so. I think, I mean, there's an issue there, because inquiry of management, discussion of management, as to why these errors are happening, or if you like, how they have arrived at that figure. Because remember that work in progress has general overheads. I think Dudley did BlackBerry, I think, is one of your risk questions. And one question you're always asking whenever you see WIP is, you want to understand and you want to inquire, because you cannot know as well as the director. I'm sorry, we have to give that respect to them. It's their industry. They know how best to allocate general overheads to their products. So we want to understand, inquire. They'll tell you, walk you through it, and then you will then review. They're the experts. Review how they've arrived at that. So this understanding of how you've arrived at that and why you think so, and then that's another good answer. James, any thoughts? How did you what did you think here?
My next one was, if it is material, then make an adjustment for it in the financial statement.
Yeah, perfect. Yeah, tell them, and you can extend that. Did you talk about the consequence of not making? You might not have. It's not something people usually remember. But did you mention anything about the consequence of them not, if they refuse to make the adjustment?
No, I didn't.
No, that's fine. So please make a note. You see, because this is a standard answer that will always get you a mark. So whenever it's in the open, it's up in the air, you're sort of saying, listen, we need to consider whether or not they will adjust this, and if they don't, what's the consequence for the financial, for the opinion. So that's how you sort of go with that. I mean, you could carry out some practical tests as well to sort of see for yourself post year end. I mean, it already tells you that it should, but just to verify for the director, saying, listen, I'm sorry, post year end, this stock is selling then less than you actually have spent making it. So you want to have evidence with the director, not just say, but. So we're sort of arguing there. But you're right. Excellent. Those are all very, very good answers. So let's just look at their answers and then just sort of see what we can take from there. So here we are. So again, you need to look at, he says, the extent of the potential misstatement should be considered, if you like, and you're really looking for the size of the. I think what I did was, I think I wrote, obtain the full list of all the inventory that is said to be misstated, if you like, and then recast it and add it yourself, if you like, what you want to physically have your hands on it, and what's going on here, right? And then they have discussion, always a good answer. Look at the individual materiality, look at it as a group, ask the directors to, look for, this is request a written representation, including the inventory errors. Written representations over inventory, for me, I find are slightly, I don't know, I just don't know. I mean, yes, it's there. If it doesn't affect your opinion, then yes, there will still be a management letter in the end where you have told them these are all the errors and I think you should adjust, because we still want them to adjust for good financial reporting. Whether they choose to or not, it will depend on they can do that, but we will still make an opinion. We can still give an opinion if we don't think it's material. So that's fine. But here, if they choose not to, then you need to think about whether or not your what type of opinion you're going to give. Okay, great stuff. So yeah, so I thought the next question, going concern indicators, we're just going to rattle through them really. I mean, I think this was out of I think this was out of 16 marks, if I remember. And definitely I would be expecting us, I'm sure you would, to pick up at least 14. 13 out of 16 is something definitely you want to be like, okay, yeah, 12 to 14. I mean, of course, you can always get more, but you want to make sure you're at least picking up those marks. Okay, great. So whilst I ask the rest, Hannah, if you write one or two of your answers in the box, so I can at least still get you in the conversation. Graham, just name two concerns you had. I mean, they're just littered there. It's just this is a made up company. If you really met a company like this, you would run. You wouldn't even take them. But, you'd be like, this is too much work. It's more work than money, because you're not going to get any money in the end, if you see what I mean, for the audit. So anyway, two of your points. Graham.
Yeah, so loss of the market share to a competitor.
Yes, perfect. Yeah.
And needing to fund new products to stay competitive, but no funds are available.
Exactly. I mean, going concern questions are just great. Audit. I remember thinking, when I was thinking, yeah, I think this is what I want to do. It's not too complicated. It's sort of somewhat obvious. I can do this. I can write up my report sort of Friday afternoon, and then have a drink later on with the boys, and then play football at the weekend without feeling. You turn up on a Monday morning to work and still be quite relaxed, because you can almost pick these out, right? Pick these out. I think the issue is testing it. That's where you and directors will disagree. But in terms of picking out the issues is the point. Yes. Okay. Look. Let's look at Hannah's. Hannah has. Oh, sorry. Right. Yes. I only heard write in the box. Yes, sorry. Yes, please write just two of your points, two or three of your points from the going concern indicators in the box, whilst I ask the rest, so that I can still involve you in the class. Did you catch me now? Yes, loss of major customer. Oh wow, you're writing pretty fast. Loss of major customer. Yes, that was yeah. And overdraft. Perfect. Dudley, any two more from you?
I mentioned that the company's cash flow is worse over the course of the coming 12 months.
Yeah.
And
thank you, Hannah, by the way. Carry on, Dudley. Sorry.
And the legal action being taken against the company.
Being taken away. Yeah.
Meet the debts that should incur should they be successful.
Exactly. Yeah, exactly. So some very good answers here. James, any others to add that you felt?
Yeah, I got that the shareholders are not willing to invest any more money.
Exactly. Yep. Perfect. Yeah.
No, you've covered all my other ones.
No worries. Yeah. So that's good. Thank you, Anna. That's good. Well done. So that's that, and then you're away. You're away with that. Cool. Natalie, let's jump into the next one. The going concern procedures. Now, if you remember when I was talking a lot about this topic under reporting, I highlighted that going concern is very much about cash flow, not so much about profitability. And when we say cash flow and resource, I guess literally even, can you continue, if you like? Can you continue? That sort of thing. It's only because I have I mean, from a football point of view, I'm sure Dudley will agree, Chelsea being one of the greater teams out there, we think Tottenham, I would like Tottenham to lose every day, personally, when they play football. And when Harry Kane wasn't able to play for a while, they just weren't scoring that many goals. So as a going concern, I was thinking, yeah, great, brilliant. Not a going concern here, cannot score any goals. So you can look internally as an organization. If you're losing specialist resources, if you're losing big customers, and then we come to cash flow. So, profitability is deceptive. So we cannot really be looking at profitability ratios. we're really looking at cash flow ratios. Can I pay my interest? Anything that threatens my assets that stop me from continuing, security of my assets, breaches, covenant breaches, the fact that my assets might get taken off, the fact that I'm looking for new sources of going concern is a great one. There's lots of things there. So in terms of investigating, you could almost just put on your financial analyst head as opposed to auditor head, supposed really and really analyze this. So Natalie, we'll come to you. What were some of your points that you felt that would work here of you going out there to look for?
I've got review their cash flow forecast.
Perfect. Yeah. I'll just push you a little on that. So you review the cash flow forecast, and what type of, there's a fancy word you want to always add on to that now. You would carry out a kind of something analysis. We did it in performance management, actually.
That sensitivity.
Perfect. Yeah, sensitivity analysis. So the thing about reviewing cash flow forecasts is you always want to do something with it. You want to do a sensitivity analysis. What if? And you want to what if everything as you know relevant to that industry. So just feel free and write. The examiner's happy that you've said review but you're just saying, because a normal student who hasn't done any work would just write, well, they've got a 12 months cash flow forecast, I'll review it. Well, what does that really mean? Review it. I'll just have a look at it and then I've looked at it. No. I mean, you could go so many places with that in terms of looking at actual to budget for the 3 months into the new year, to look at the variation, to see if it's in line, to see if they've adjusted it. You can go on and then what if, and you could analyze it. You could really break it down, just to see who the major suppliers are. Have you lost any of those? Right. Yes. As usual, Hannah, if you type in the box one or two of your answers, if you can hear me, then I'll keep asking the rest of your colleagues. Graham, what was another sort of something you'd want to analyze or to look at, so to speak, here?
I was trying to match my answers from B to C. So
okay.
Yeah, one of them was discussed with the owners and management the future plans for Clarinet
Perfect.
in light of drums taking significant market share.
Yeah, exactly. Because exactly. And they should have, they will have. And I'd be surprised any big organization that doesn't have some kind of risk committee that's out there with some sort of mapping document as to where they're going, if you like. I'd be entirely surprised. So definitely, Dudley, any of yours?
So I said to review meeting minutes.
Perfect.
See whether or not there's a discussion with the management.
Perfect. Yeah.
Problems,
exactly. Yeah. Exactly.
For the bank.
Yes. Exactly. Everything right there. Good. Okay, great. So let me take you to the answers. And what I want to first of all do is to look at some of the standard answers that should always feature when you hear going concern. I mean, to be fair, a lot of them are standard here, but definitely going concern will always be very much about, they're always coming to the breaches in their covenant. What is their overdraft as a percentage of their sort of actual balance? I mean, what's going on here? Any breaches or any failure to pay interest so far? Any threats? Again, like I say, we could go on, but I think here these ones here. Review post-year end management. This almost apply to general case post-year management accounts if in line with cash flow forecast. That we mentioned post-year board minutes to see if there are any issues. You'll see a lot going on there. Audit tests in relation to subsequent events. So if you see they're trying to sell off things really quickly or over trading, if you like, or selling off assets within the organization because they don't have money. And then you attack everything else depending on what it is you're looking at. Like I said, look, is the bank going to renew their overdraft facility? And I think, again, as general finance professionals, I think you can pick up enough here, plus in addition to the actual tests. Yes, Hannah's just replied. Exactly. Looking at whether what steps that they are taking to replace and to see, really push it, go sensitivity analysis. What percentage of these, what percentage of your revenue is being made up? How dependent are you on these customers? And if they go, we can recalculate, we can do all of this and recalculate what the fall in profit and the fall in your interest cover, if you like, and if you like, the threat to your gearing position. Cool, great stuff. And then finally, let's go. So the last question was very much talking about yes, I think it mentioned something about the last question was asking, and this is where again the reason I'm doing these questions, these ones, because I want us to cover this area of audit reports. Critical. So it says, I think that there were other things there. I mean, I would always be suspicious, and you can get a mark for it. Any director who's telling you, think about it. Any director who's telling you, I think there was a director here who felt that because it had happened post year end, and he felt it shouldn't be adjusted. You should be testing or asking, because you see, no disrespect to financial directors, we all love each other. Some of them are not qualified accountants. That's not unusual. Or is that unusual? I'm not sure which way. It's almost halfway house. So it is remotely possible that they are not aware of the financial reporting standards. It's remotely possible. I doubt it, because they've been doing this for a long time. So or maybe not. So you want to test and ask whether or not they're qualified to do this, asking such questions. You almost think, don't know if I should be working with you. Or I'm now suspicious of the professional competence within this organization. And that's a valid point, really. Okay. So discuss the impact of the auditor's report. Yes, here we are. If the auditor believes the company is a going concern, but that it is subject to material uncertainty. So just as a bit of a discussion, James, what are you expecting to see here from the management, given that you all agree, okay, you know what, you're a going concern? What are you hoping they do? Before I talk about what your report would look like, if you like. But I mean, the fact that it is subject to material uncertainty, what are you expecting from the directors when they prepare the reports, their financial statements? D word. It's a D word.
Yeah, so I only just started answering this one.
That's fine.
But the first thing I put was to put in the fact that they're not a going concern.
Yeah, well, yes. Well, there's material uncertainty. I wouldn't say that they're not a going concern. That's a bit strong. That there is material uncertainty about going concern, relating to going concern. That's important, because if they weren't a going concern, then you would have to break them up. You would have to actually, if you like, you couldn't prepare the accounts on a going concern basis, if you like. But there seems to be some material uncertainty. So you said that, yes, that they should make a note, and that's the key point there, that they need to disclose. So let me then go. Sorry, James, I'm just pushing you. So they've disclosed that they are a going concern. Now, for you as an auditor, what does that do to your opinion? As what opinion do you give? Are you happy? Are you not happy? Do you give a modified opinion on the accounts now that they've disclosed, or do you give an unmodified opinion, as in everything's fine?
A modified opinion.
A modified opinion, but they've disclosed. It's okay. We're having a conversation. Don't worry. So this is a good way of teaching. But they have disclosed that they are. Yeah, sorry. So maybe I missed what you said. Did you say modified or unmodified, James? Sorry.
I said modified, but yeah.
Yes, good. It's unmodified. You see, because they have disclosed, and because they have disclosed, that's there for everyone to see. The accounts that you've just reviewed are to do with that particular financial year. We're really talking about the future. Things could change. Something could come along and they could get some new clients. All we are saying, if you like, is just to bring to the attention, if you like, of the shareholders, of the user of these accounts, that we're happy with the accounts. The opinion, perfect, no problem, true and fair for that year. We're just bringing to your attention, if you like, that there is an issue concerning the future of this company. Cool, great stuff. So let's go to Natalie. So how would I then, in my report, what additional paragraph would I have to add in, or would I, any idea? Sorry, Natalie, did you catch that? Am I lost?
Sorry, I was talking away with my it was muted and I was
Oh,
talking.
sorry. That's okay. That's all right. Don't worry. All this ends when we see each other again in September.
Oh, I can't wait.
The Zoom phenomenon will be gradually subsiding.
So if the disclosures are adequate, so
Good.
there would, in the report there will be a heading there.
Good.
And it will be in relation to the material uncertainty as a going concern.
Perfect. And just for bonus marks, I think it's always good to state for the examiner where this paragraph would be.
Basis for opinion.
Perfect. Very good. Good. The basis for the opinion. So just underneath. So you want to let the examiner know that you fully grasp what's going on with reports, right? That you fully grasp what's going on. Just coming back to James, I accept if they refused to disclose, then the accounts are not true and fair. And just because I'm teaching, I just want to extend that. Again, it'll depend, which is where the writing is. It'll depend if they don't refuse to disclose. The second piece of the second level of work you would have to carry out is to see what the consequence of this failure to disclose is. So say, for example, there was just one matter. Maybe it was, because it's possible, it might just be purely to do with maybe their loans, which is usually the common case. They're still looking to refinance, if you like. They're coming towards the end of the year and they haven't quite settled this. And I'm sorry, that is an issue. So directors disagree, but if they have a large overdraft and they cannot guarantee, or if they have loans that cannot guarantee, that is a going concern matter, because the simple question is, if the bank calls in the loans, boom. So if it's strictly on that point, you might say, well, it's true and fair except for this matter of failure to disclose on the loans. But if there were other issues that pervaded the entire financial statements, then you would say it was adverse and say this is not even true and fair at all. So I think that's how you should write it, you see, because you cannot know the extent of the detail in this type of exam. Okay, great stuff. So that was here we are. Yeah, so that was yeah, that was this one. I forgot the name of the Clarinet. That was Clarinet. Let's just look at their answers very quickly, and then we'll take a short. Oops, sorry, my screen will move. Okay, let's recover the web page. Sorry. Yes, quickly. Okay, I'll just, whilst that is loading, I will just look here at some of the answers. So some of the things they've written here, they've said the directors have agreed to make the going concerns. That will be dependent, as Natalie mentioned, on the adequacy. So language is language. Picking up this language is what you're really trying to, like I said earlier at the beginning of the course. If the disclosures are adequate, then the auditor's report will need to include a section, if you like, material uncertainty, excuse me, relating to going concern. Material uncertainty relating to going concern. We're saying it's not modified. We're just saying that it's, there's material uncertainty, and we're cross-referencing it. If the disclosures made by management are not adequate. So this is one of these interesting bits here where I think that what you have to do, you have to tell both sides to the story. We cannot stop it, well, just on the one side. If it's not adequate, then let the examiner know you know exactly what we're saying, that we would say they were modified. The extent of that will depend on whether or not it was qualified or adverse, right? And then we would modify the basis for opinion paragraph, if you like. Okay, great stuff. Right, well done, guys. It's 10:43. I'll give you 17 minutes. So let's take a break. We'll reconvene at 11, and we will go on to the next question, which I believe is Paprika. Yeah, cool, great stuff. Hi guys. Hope you're well. Welcome back. So I'll tell you one thing definitely that I found interesting about this whole lockdown period with Zoom, especially, is that in terms of timing, things are slightly a bit more efficient in terms that you actually do start classes on time. Breaks are actually for 15 minutes. Generally, when you're in class, there's a tendency to sort of, you're looking for the board pen and you're doing this, and then you take a break and it extends into 20 minutes and things like that. So it's going to be an interesting shift back to the whether we return to our old habits or whether we remain even as efficient. Um, Paprika. So now what I want you to do, I think this is again the reason we're doing these questions is because I mean we studied this last week or maybe 2 weeks ago because we did consolidation. We did the consolidation questions last week, so we did this 2 weeks ago. Don't worry too much if you are missing a bit of the knowledge. Remember, you're keeping notes, which is why it's really important to try and do the questions. You're just keeping your notes so that even if you don't answer it perfectly, when you go back and do these questions again, you would have added and you'd be sort of knowing, right, these are the bits I missed out. But try your best to answer it as much as you can and as well as you can in your own language. And then you notice that we can correct that when you now check the answers. And it does really test, because this is quite central to reporting, understanding clearly what happens when, well, understanding why the differences between modified opinions and or unmodified opinions, which is good, and your modified opinion, and understanding what happens under the branch of modified opinions. If you're like, what am I doing? I'm not happy. And I have explained before, there are two reasons why you're not happy. And this kind of tests you. Um, you're not happy. Just as a little clue, you're looking at the entire financial set of statements. You basically think of mathematics and just think of maths versus um, not being able to see. If that's a clue. So those are the guides. So we'll discuss it anyway. And I think that the rest of the question, because like I said, every bit of the question will always have a bit of knowledge, which is standard. And then the rest of the question should be quite fair as well. It's not that crazy. Cool, great stuff. So this is a 20 marker. So this 20 marker takes us to 20 times 1.8 takes us to 36 or 35. So I will give you till, yes, I'll give you till 11:35 on this one. Yeah, or 11:33. Yeah, 11:33 actually. Yeah, 11:33, because you can just take out the main points from the second part. It's not as, yeah. Okay, great stuff. 11:33, and then we will reconvene to attack the question. Okay, right. So let us. I think what I wanted to do quickly was to just reference the chapter on this. So I think I noticed. I think Dudley came back saying the same thing. Graham came back saying the same thing. Even Natalie came back saying the same thing about it being a good idea to have read chapter 4 before dealing with this question about controls and responsibilities of, if you like, conditions and preconditions. And I mean, you have enough time. It is a good idea to go back and look at chapter 12 again to confirm learning. But the key argument, as we discussed in the question prior to this one, was that we had a case where we were happy with the accounts, and typically we expect all the disclosures to be in there, and they were putting in all the disclosures, but we would just, so typically perfect scenario, all the disclosures, it's a going concern, there are no issues, boom, if you like, accounts are true and fair, and the report is done. That bit talks about looking at, there's a section called other information, and I think you might see a question on that relating later on, where you have other things in the statement of financial position. Yeah, time is always, I wanted to ask you guys a few things that might, why not, let me just ask you, it's good for revision, just for the fun of it. In other information, what are some of the statements, or what are some of the things that we can find in annual reports that we as auditors do not audit, but we review? Any, at least, you might know at least 2 or 3. Anyone? It's in the annual accounts, but we don't actually do an audit on it by virtue of the fact that it's too late anyway, and it's verbose, it's wordy, and some of them are. You do have others. Hannah, you can write in the box if you think you know it. If I was playing charades, it'll be, if you can see what I'm doing. First syllable, second syllable. Did that help?
No.
First syllable was chair.
Right.
Second syllable.
Chairman.
Chairman, the chairman's report. Right. Graham. I'm not inviting you guys around for Christmas to play charades. My team would lose. The chairman's report. So the chairman's report is, we look at it, and I highlighted some of the things. Again, this is where in audit, if you get a question on it, it could be a knowledge question. Typically, it probably, sorry, what am I saying? It will be a knowledge question, because you will not get a chairman's report to do any audit on. So that's the first one. There's at least one more that you might, yeah. There's the operating and financial review. There's the social and sort of economic report, things like that. So this is why the chapter is important, for those knowledge bits to just make sure you know, and your knowledge of that shows the examiner that you have actually gone through the discipline of painfully remembering all these little knowledge points as opposed to just procedures, because typically you're right, the bulk of the exam is procedures. That's the truth. Okay, great stuff. So, or you might have great accounting, wonderful, but then some uncertainty, or something, another issue. So anyone can help me. I'll probably go to Dudley here. The first one was, we said that you might have this material uncertainty due to going concern. So we've said that we tick that box. There might be other issues. So for example, there was a court case that we were waiting to hear, but it was quite significant, and we wanted to draw the attention. What was the name of that paragraph we would create to bring that sort of thing underneath? Anyone can help, Dudley. The first word is that, let's start with E. E-O-M, as in 3 words. E, O, second word O, third word M.
Something of matter, but I can't think of.
That's right. Of matter. Yes, carry on. Any other takers? Okay, charades again. Emphasis of matter paragraph. So there's an emphasis of matter paragraph that if you want to bring other things that are not to do with going concern, but are other issues, you would have an emphasis of matter paragraph, which will also sit underneath the basis for the opinion, if you like. So we don't mix up the two paragraphs. It's just that, this is just typically, I highlight again, court cases, or typically maybe another framework that we need to think about in terms of, or maybe they have a significant new CEO coming in. Just things that you might want to bring to the attention. And typically they are post, if you like, the post the events. So they're at the year end. You weren't reviewing it during the year. Yes, you weren't reviewing it during the year. James, I'm just going to push you here. What do I call those matters that right at the beginning at planning, especially as a listed firm, I would spend time working on? I would talk about them. It has its own paragraph. And I would examine them. You see, the going concern and emphasis of matter paragraphs are things that I picked up post-audit, subsequent to the audit, and I would like to bring to the attention of my users, of the shareholders. But right at the beginning of the audit, there were some other issues. As listed firms, we wanted to spend some more time on. We were going to devote time. Any idea? I'll give you a clue. It's a key audit matters, James. They're referred to as key audit matters. So right at the beginning of the audit, you're like, oh, we need to look at these things, guys. We need to address these things. These are important. We need to think about them throughout the audit. You devote your best staff, your specialized, your most senior. It might be it might be inventory, it might be some litigation. The key point is you knew this at the beginning of the audit. So these are the knowledge areas you could get, if you like, that you want to be happy with. Okay, great. Then, of course, we come to the question of modification, if you like. And I highlighted clearly with modification that you may not have found, again, like I said, there were two reasons. I'll just very quickly rush through this and then go to, because that's really the knowledge bit. Again, so based on the evidence that because you feel that the client has not complied with the applicable financial reporting framework. Now, this, of course, means that this is what causes misstatement, right? Recognize inventory at lower of costs and net realizable value. They haven't. Misstatement, not applying to the framework. Revalue instead of recognizing as an expense, if you like. You don't need to know the IASs, but I've read some of your work. Some of you guys are actually putting some of the IASs, International Accounting Standards. That's great. If you do, if you don't, doesn't really matter. But the key point is that the reason why we discuss misstatement is because there's a deviation, right, or away from the benchmark, which is the financial reporting framework. Right, because that's based on all the accounting concepts, blah, blah, blah. Or you just haven't found enough evidence. So those are your two main reasons why you would be unhappy. Now, it's just about the degree of unhappiness. How unhappy am I? How unhappy am I? So if it's a case that I can't see, so I'm going to come back. Sorry, James, you didn't respond to my key charades. Was it that you did it? My charades wasn't very good, or you didn't? You knew it, but you were just quiet. So I'm going to come back to you, James, on this one. So what opinion do I give, James, where it's to do with the fact that there is a deviation from the framework and say inventory, but this is isolated only to inventory. If you like, would you? I mean, what opinion do I? What type of opinion do I give? What name of the opinion do I give? It's just isolated, just a numerical issue. We disagree on a number here. I think you should write it down by 40,000. You think you shouldn't write it down, but it's material. That's the only problem in the accounts, James.
I know the beginning of the letter.
Yes, you can help, James. Yes, go. What's the beginning of the letter?
Q.
Q, James. Oh, I don't think James is there. Hannah, can you type it out, Hannah? So we have that scenario where we're just, yes. So Hannah's helping out her friend from, oh, you think he's on a work call. That's fine. Okay, that's okay.
It's qualified, Dorian.
It is qualified. Exactly. Thank you. So it's qualified. So that's qualified. Yes. And if coming to Graham, if you weren't happy at all, if you were happy with the mistake, if you weren't happy with the misstatement in inventory, you weren't happy with the misstatement in the provisions, you weren't happy, and this was literally happening right throughout the accounts. There were misstatements everywhere, and what would you go for?
Adverse opinion.
Perfect. Adverse. Excellent, guys. You see what's going on, because we would say that the issues here were perverse or pervasive. Right, and so that hopefully will guide your definition. So really what they want you to do is just talk about that spectrum of going from, and even stating it's a technical subject, stating that because it's qualified, I would say true and fair except for, because it's pervasive, I would give an adverse opinion. It's a technical subject. It's not, romantic. It's just technical. So there's no need to use flowery words. It's just hitting those core points. Right. Or, of course, we're following exactly the same principle in that we don't have enough information. So again, if it was we just didn't have information on one bit, we would say it was qualified except for. And Dudley, if it was the case that we just couldn't find information on so many things that happened right throughout the accounts, what type of opinion would we give?
Disclaimer.
Perfect. Disclaimer of opinion. Smashing. Awesome. That's the knowledge covered. So very quickly going to this matter here, Paprika. So they ask you to, again, which is what we were just saying here, they want us to explain the meaning of the term pervasive, which is where you can see where the extreme spectrums of both sets of unhappiness. And what we have here is something that is affecting the entire financial statements. I mean, for 2 marks, it's not a lot. I think you probably will pick up a mark and a half. I guess what you can do, again, there's not a lot of marks. You can discuss there are other issues where things might just be pervasive. They don't have to just be about misstatements or not finding information. I guess a popular one is 2 popular ones just to help you is that if you have chosen to repair your accounts as a going concern when it shouldn't be, it's a breakup. Fundamentally, the accounts are flawed. Fundamentally, so those should not be repaired on that sort of. If you've used a completely different set of, to be fair, why you would take this up as because it's a precondition. If you've used an entirely different framework, or if the framework has been adjusted when you post taking up the job, if you've reverted to a different set of standards, yes. And then, of course, if they refuse to consolidate, again, we want to see the financial statements in the context of a whole business, right, including all the subsidiaries. But if you choose to refuse to consolidate, then we have issues. That would be another issue. So this really in itself has nothing to do with, because when we come to F7 in September, it doesn't matter whether you can't exclude, if you own 100% or if you control a business or a company, you cannot control a company, forgive me. So there's no, when I say business, sole trader is a business, call a company, you cannot say we won't include the company because for whatever reason, you control it, include it, whether their profits are good, whether they're doing well. So there are sort of the classic reasons. And we've just done that, explained the 2 types of modified opinions, right? Where there's an issue which is considered material and pervasive. So material and pervasive, adverse opinion, material and pervasive, disclaimer of opinion, and discuss the 2 driving core reasons of deviation from financial reporting framework leading to material misstatement and a lack of sufficient and appropriate evidence. Yeah. Okay, right. So we'll go to Graham. So what were your thoughts, Graham? This next bit here, I thought this was quite fair. They wanted 6. Let's start from the top. What were your sort of, and then they said something like explain for the above report, identify and explain. So we'll take it from or however you wrote. I'll take them off as you, it doesn't really matter what order you went. What did you think was worrying here?
Are we on C now? Sorry.
Sorry, yes, we are. No, we're on Yes, we're on C. Yes, we're on C.
C.
Oh, sorry. Forgive me. Sorry.
was gonna say,
There's a B. I completely skipped that. B. Thank you. Your thoughts on B, the independent expert. Yes.
What did I put? I've put accuracy of the independent experts. Quantity should be reviewed and verified.
Yes.
Yeah.
Good.
Yeah, Brown and Co should meet with the expert to assess whether they have
excellent.
necessary expertise to carry out the task.
Great stuff. Yeah. Good. And everything really in that range of argument that because you see, let's be clear, you are ultimately responsible for the final work. So whatever it is they've done, they should at least outline their process. You see, this is important, their process. So you need to then, as you would for work in progress, if you like, as you would for certain valuation techniques, even for property, you would have to just understand their process. Very good. So really trying to look at the qualification, the technical ability of the expert. Any other? I think it was I don't know whose work I marked. It might have been Graham's work. Apart from the technical expertise, what else might you want to make sure that, or what would you want to at least have some sort of checklist to test for when dealing with experts? And Natalie or Dudley or Hannah, what else might you think? Just want to make sure that that I'm looking for the right. I'll give you another charade. So you probably won't get it, but I'll do the first one. Maybe if it helps. Like, no, that doesn't help. That's a bird. That doesn't help either. Free. I can only give you a word. I failed this charades task. Free. Independence. The independence of the expert. You know, there's so many experts out there nowadays who only have one client. And that's in a bad way. So as a result of that, it's in their interest, self-interest, to increase or favor the client. So you want to test the independence of the client. You might think, oh, and how would I do that? You might do it by written representation or writing to the client. You might Google and just do some research, see how big their organization is. You know, it really is to a certain extent. This depends on the certain materiality of this. And to be fair, this question is slightly backwards. At planning stage, we would have a list of we would request all this information, who all their experts are, who their bankers are, who their lawyers are. And we should have some planning material on. So it shouldn't be the first time we're suddenly coming across this expert unless they haven't mentioned. These are the sorts of things we ask about at planning. Because as you can imagine, think about it, imagine this is a material amount and you couldn't get in touch with the expert, or, it's not going to be good. Cool, good. So coming back quickly to C, yes, we will go to, yes, Natalie, your thoughts. So what were some of the things you felt were just a bit off with this, what this current audit senior has produced?
Should I start from 1?
Yes, please. Yes, that's good. Great stuff.
In paragraph 1, I said that the auditor, it's not going to make sense in English, but should only really have an opinion on like the statement profit and loss, statement financial position.
Yes,
flows.
Exactly.
They can't expect to have an opinion of everything.
Yes. Good, excellent. And I actually prefer the way you've broken it down, because you're letting the examiner know that you're quite aware. I'm sure you might have forgot, maybe you did, with statement of cash flows as well, notes and disclosures. So those are just to complete that ballpark. Really important to you're right. And then like what I was saying earlier on, you can drop some. I mean, to be honest, it's 2 marks. There's no time. So you don't have an opinion on the chairman's statement, although we review it. You don't have a chairman's report on the OFR. Operating Financial Review. Hi, James. No problem. Thank you. James, I was talking to myself for a while there, and I played my charades game, and you missed out on that. So
sorry.
That's okay. That's all right. I forgive you. It's all right. I mean, no one else guessed the guessed it correctly. So if you had guessed it correctly, it's like, you know how you watch Family Feud or Family Fortunes, and everyone thinks it's not going to be on there, and then someone gets it. So it could have been right, but we'll carry on. So yes. So the question, you have chairman's report. So you want to highlight the, well, we're not going to audit all these things. Very good, cool. Dudley, your thoughts on the and Hannah, you will look at the third one. Hannah, you look at the third one, so you can write your answers in the box. Dudley, your thoughts about the second one, where he said we conducted our audit in accordance with, what should it really be? Dudley, are you there? Oh, yeah, I think you're on mute, Dudley. You might be on mute.
Sorry, I was muted.
Yeah, sorry. It's okay.
So I focused around the fact that they said they applied most standards.
Yeah.
They, they can't simply pick and choose what they do and don't want to apply.
Perfect.
I've ordered them.
Perfect. Exactly. So, and this was an exam question. It's an exam question. Okay, great stuff. So we'll go to 4 because Hannah's working on 3. James, did you get a chance to? I know you want a work call. Did you get a chance to do this question or to do parts of it?
Yeah, I did.
Yes.
I said about 4 that it's actually not the responsibility of the auditor to prevent the fraud.
Perfect.
Up to the management.
Excellent. That's exactly. This is a staple question. This is a staple question. I'd be surprised even if it's a 2-marker, 3-marker, because it's so central to everything we do. You want to, and I think it was Dudley who had a really good write-up in his report. I think when he did BlackBerry, I think if you do BlackBerry, you'll see that. It's really important to state that we will carry out our tests to find errors due to material errors due to fraud and material misstatement, if you like, because if it's material and it's fraudulent, we will find it. But of course, if it's fraudulent and it's not material, and fraud as well is quite if you like, does take more than one person's collaboration going on. So and also in your answer, you always want to highlight that it is not the responsibility of, if you like, the auditor. Good. Oh, sorry, Hannah, can you hear me? Have you? Yes. Because Hannah, I've left number 3 for you. All right. Okay, great. So Hannah has written, yes, cannot exactly. Perfect. Sampling is used, and not every transaction is, if you like, is tested. Excellent. Yes, excellent. That's correct. Yes, we cannot. So Hannah, just by the way, just because you're written, we cannot obtain maximum assurance. So what level of assurance are we giving them, Hannah, then, therefore? Perfect. Reasonable assurance. Okay, brilliant. Good, thank you. Number 5, Graham, we're back at you here. What were the thoughts there?
I just put the availability and expertise of the team selected should not affect the procedures of the audit. Yeah,
exactly. I mean, again, ethically, you should be professionally competent. Really, if you don't have the team, then don't take the work. Cool. Natalie, we'll come back to you on 6.
So basically, they probably review how effectively the internal controls are. They report on this, but they just basically review. No, not review. Give an opinion on the financial statements.
Yeah.
The internal control. They don't kind of. I'm just trying to say it, but they can look at the internal controls and see if they're working.
Correct. Exactly.
Make recommendations, is that right?
Correct. Exactly. Correct. Exactly. As part of our measurement of audit risk, we test controls. We don't. This is a completely separate engagement, by the way. So this is just, you can have an engagement about, if you like, the effectiveness of internal controls. We will give limited assurance. You can bring us in to look at it, but that's not what we're doing here, if you like. You're right. As part of us determining what our audit risk will be, we will look at internal controls. So like you say, we will review it, do walkthroughs, and at the end, we can make some recommendations. Brilliant. Dudley, back to you at number 7.
So I don't really want to answer that. So that, I said that they should conduct checks of the financial statements in line with the IFRSs.
That's correct.
And if they're not in line, they should be redrafted or amended so they can be corrected.
Yeah, I mean, it is true. So, Hannah, I'll come to you at 9, Hannah. So you're right, Dudley. Yeah. So that's true. I mean, of course, management, evaluate the financial statements, but we should, because as part of our final audit, we should, if you like, review and evaluate the overall presentation of the financial statements. Because you see, at the end of that, we need to look at the overall presentation to see whether or not the accounts are true and fair. Yes, we've been working on these individual accounts, these individual areas, but we actually do an overall review and evaluation, as opposed to saying we've just done our little in-between bits and then leave it. James, what did you think here?
Yeah, I actually got 2 for this one.
Oh, good. Okay.
Saying that they shouldn't just consider the new estimates.
Correct.
There should be ones that have been brought forward in previous years as well.
Of course, exactly. Good.
And I thought the accounting policies might have changed throughout the year, or the position of the company might have changed.
Exactly. Exactly. So you're right. So that's it, really. We need to review all accounting estimates, I know, again, you don't really need to know the standards, but we do have standards that guide us about accounting estimates. Classic accounting estimates are depreciation. So what they're almost telling us to do is that, you might have old accounting estimates from other things that have been depreciated or whatever. So you need to kind of review those as well. And you should always go back and look at accounting policies, like you say. Things might have changed, standards might have changed, things like that might have happened. And then finally, Hannah, your thoughts here. In order to confirm raw materials, I mean, this is a slightly half answered question. I think it's just completing the principle of what's going on in number 9. We're almost saying here that we relied on the work undertaken by an independent expert. Is that enough? Is that enough insurance, so to speak? What else must we do, Hannah, to sort of, do we just stop and say, well, that's the work, that's the independent expert's opinion, and that's what we've relied on. Sorry, I'm just waiting for Hannah to drop her answer. And then I think, oh, yes, that was the... Yeah, I'll just carry on talking while I wait for Hannah to drop her own answer. But you're right, so good. So you can see that that is very much the nature of that task, and that wasn't too bad at all. So what I definitely would like you to definitely do. In fact, I think what I will at least do is we'll discuss the A section of Panda, and oh, Hannah, are you there? Sorry, just want to make sure Hannah's there, so that I haven't missed this. I might have lost her. Okay, I'll just discuss that then. Maybe I think I've lost her. Here we are. So we cannot just rely. We must actually, I think Graham mentioned it earlier on, we must look at the process, because we are overall responsible for that figure, if you like, for that for the valuation of raw materials. So we must, if you like, look at the process and arrive at and follow it up, if you like, and inquire of how they've actually arrived, be comfortable with the way that they have allocated the figures and then the overheads or whatever it is. So we are still ultimately responsible, and we cannot sort of separately disclose in the accounts that we relied on the no. That's kind of part of what we do anyway. We're constantly requesting information from third parties, so we are signing our names to the valuation. Okay, great. So yeah, I mean, so very quickly, just kind of before I let you go, so that you just look at this again, like I highlighted earlier on, you will always get these knowledge questions. This is a straight knowledge question. I mean, I think this is a bit harsh. When I say harsh, explain the 5 elements of an insurance engagement. We'll talk about it now to see how much you remember. Don't worry if you don't remember everything, but that's the point. You can get, because marks are strange things, 5 whole marks for remembering 5 knowledge points, as opposed to you spend all this time investing in reading through scenarios and you still get something like 10 out of 12 or 11 out of 15, when you can actually literally just pick up 5 straight marks from remembering 5 sort of points of an insurance engagement. The truth is, this idea of insurance engagement, the other thing I think which is fair about audit, from a legal point of view, from any engagement point of view, you typically have certain parts of an agreement that you expect to be there. So you can always just go for it, even if you're thinking, I don't quite know it in particular to audit, but everything you expect of any contract, right, is what you almost expect here. So yeah, I'll just ask you openly in your thoughts before we talk about them. What would you say were the necessary parts to complete a contract, in effect, is what we're saying, so that everyone is aware and clear of the contract? Any thoughts? Yes. So, yes, go on. Yes, Natalie. Thank you.
So who's the who's looking at the report? I don't know.
Yes. Who the users? Who the users of the? Yes, that's right. Who the users? Now, you did this question. You did this question last time. Do you remember? You did this question in the consolidation test. The very first question. Do you remember the very first question of your consolidation? That was a long time ago. You're like, wait, how do I remember that? The 3 parties.
Oh yes, practitioner.
The practitioner, if you like, the intended user, if you like, and the reporting entity. So that's one element, if you like, of an assurance engagement. Definitely, who is this thing for, right? So hopefully that pushes you a bit more now. What else do you think would be of any engagement that you would expect without even reading this? Just think in general. Where else would you go if you were doing a contract? Yeah.
Is this the chapter 1? So you got like suitable criteria.
Yes, that's right.
Report.
Yes, exactly. Yes, exactly. The one, the something. What I'm looking for is the 5-letter word, starts with an S, ends with an E.
It's scope.
The scope. Hey, look at that, my charades work. The scope of the contract. What exactly are you looking at? What exactly are you looking at? We've talked about it already today. A framework. You see, you cannot carry out any engagement without having, well, you can to a certain extent, but there must be some benchmark. But this says assurance. This says assurance engagement. So there must be some framework, some benchmark to actually work with, if you like. So the scope, the benchmark, the intended users, if you like. It's almost quite similar to what you would find in a report, if that's a bit of a clue. The responsibilities of both parties. And I mean, it's kind of like, I've forgotten the term we use for it at college, where people come into a room and you say, okay, these are the rules that we're going to abide by. These are my responsibilities. These are your responsibilities. You'll be here on time, if you like. And that's kind of the what's going on here, because it's a pure knowledge question that I think is this one, the one with fraud. These are the sorts of things you want to be very comfortable with. Cool, great stuff. So definitely, please, for the weekend, definitely whack out Panda, whack out the next one, whack out the last 2. But I suggest that you just read maybe the let's just see. I would say ask you to read. I mean, after all, you are revising. Let's just go to the study text. I would ask you to read up on. Where is my? There's a problem with this thing. I have table of contents. Let me see if this has here. Yes, I would ask you to look at yes, why not chapter 11 and chapter 12 before finishing off those 3 questions. Just take a novel approach, just kind of read and breeze through it, and then finish those three questions, and then you can send them me, and you can then say, okay, listen, we've wrapped this up. So it means that what we now do is we go back, and what we will start doing from next week is we will review those questions. I mean, if all of you send them all in to me and I mark all of them, that means that we can go straight to start looking at procedures. But I might probably review those. We'll probably go through those next week. If you all send them, that'll be great. And then we go into looking at procedures. And we're just doing as many questions and just seeing all the different procedures for looking at bank and receivables and revenue and inventory. So we just get the language they're going as well. So we start covering all of that. So just to finish off, I sent you some articles last time. Oops, sorry. I'll just take you there. Yeah, I sent you this. 1 second. Let me just share. Sorry. Yes. Can you see my screen on KPMG, by the way? Sorry. Is that showing on the BBC?
Yeah.
Oh, brilliant. So I sort of sent you this. I mean, I think with Audit as well, and there's a technical website. I sent you a link as well. I think we're definitely at the point now where you can kind of print off some articles off the there's a technical page for every single course. Performance management, it's just time to just get through the syllabus, get through the kit, do past papers, and then look at technical articles. It's just time. But otherwise, and I guess tutors are different as to how they complete their syllabuses. Some people are able to. I guess the point is, how do you integrate that into your teaching? So I saw this article. This was to do with this question of professional skepticism, and just to kind of take you through, but very quickly. But this happened in 2019, but still quite important because KPMG have also been in the news with this company called Carillon. But I'll talk about this first. So what you had here was that it says that the Financial Reporting Council said the KPMG's bad auditing, I mean, strong words, came in the wake of, so basically the Co-op Bank, which is not associated to the Co-op. The Co-op sold their banking arm many years ago. And then the Co-op Bank merged with Britannia. And really, and KPMG had been, I mean, there were quite a number of issues here. KPMG had been their auditors for like the last 24 years or something like that. I think I read that, yeah, something like 20-something years. Shows you another issue to do with this question of ethics and rotating clients. Because when you have a familiarity, you've been with them for too long, no one's quite sure where the line of self-interest, and can you really challenge and can you really advise them on what to do and what not to do. But what was interesting here was that he said that the FRC said the KPMG said it regretted that some of its audit work did not meet the appropriate standards. And what was this really to do with? Well, when the Co-op Bank bought Britannia had made or sold all these loans, if you like, to people who probably weren't the best people to lend money to. So they had assets on their balance sheet of like, we are owed money. So think of it as a receivable from XYZ ABC. But of course, the quality of those assets, if you like, depend on how well, if you like, the people they have lent the money to can pay interest on time, because that's the income, and eventually pay the entire loan back. So if you like, settle the receivable, if you like, right? So debit bank, credit the receivable at the end of the loan term. But really, many of those loans, if you like, at the time of this merger, KPMG were acting as auditors, acting as advisors for the Co-op, and didn't do a thorough evaluation of those loans. So when basically the Co-op, the Britannia would say these loans are worth 10 million, probably the loans are only really worth half of that. And you really were expecting KPMG to sort of say these loans aren't worth this, don't pay this amount for it. And because you're basically paying too much for loans that are going to go bad very soon. And that's exactly what happened. So suddenly you now have the Co-op writing off loans or assets, forgive me, if you like, that had been, if you like, overvalued. And so, but of course, the Co-op still has, probably Co-op had borrowed money, of course, to buy this company. It still has to pay its pension fund. It still has to pay its debtors, its creditors. So you can see that this was one of the big things that definitely affected KPMG. The other one I thought I just wanted to show you here as well was, this was the good one. You must have known when this company went into liquidation a number of years ago, but it was the fact that, because many things happened, they were taking on contracts. They were dealing with contracts. They carried on dealing in basically just dealing in contracts that they were overspending basically on these contracts. And so the receipt or the contract price was not covering the amount of outlay and amount of money they had spent building these hospitals and building these roads. And they were also having delays, if you like, in their customers paying them. But so I only bring this up to your attention because what was now happening was that Carillon were having difficulty meeting their own liabilities, and so there was a going concern issue. But if you like, it says the Financial Times reported that the legal documents accuses the contractors board. So whilst they was having difficulty still paying all their liabilities, the board paid out dividends and advisory fees because they believed the business was profitable and sustainable as a result of the audit, if you like. So they kept paying out a dividend, they kept paying out and hiring people. But really, it was wrong because it's obvious, however, that something's clearly wrong with the KPMG's audit of this business. The firm's collapse was caused by runaway greed and mismanagement at the highest levels, and UK's auditing and accounting systems were powerless to stop it. So they just really, the fact here, this literally reeks of what we just did earlier on about issues with being able to, you're losing customers, you cannot meet your covenants, you cannot pay your bills, yet you're still taking out large amounts for yourself, and your auditors are signing off and saying that you are a going concern, and that the accounts are true and fair, and there's no need to disclose, and for us to bring to the attention of your shareholders. Because if they had done that, of course, we know that shareholders would be asking questions. Cool, great stuff, awesome. So yeah, please finish that off and carry on again. Of course, now literally finish those questions off, Panda, Violet, and Minnie, and please keep on working through the other questions from well, you know, Darjeeling, Blackberry, Prancer. Keep going, do one from every section, and just keep going, and we'll just carry on with our revision that way. Cool, is that good?
Yeah.
Awesome.
Sounds good.
No worries, guys. Awesome. Thank you.
Thanks, Owen.
Thank you.
No worries. Have a good week.
And you.
Thank you. Cheers.
See you later.
Guys.
Bye-bye.
Bye.
Bye-bye. No worries. Thank you, Hannah. See you later.